Well, good afternoon, everyone. Welcome back to the channel. So now that ULTY has officially not only declared a dividend, but paid a dividend out, we can now add it to the list of dividend-paying YieldMax funds. So now there are in total 22 of them. Now we can do a full review of all 22 from inception to present day. And we're going to look a little bit more in depth as well, like for the new ones that have only been around for 2 weeks or for a month or 3 months or 6 months. We'll look at those time horizons as well. So let's dive right into it. Hope everybody's happy with their dividends they got. Feel free to chat away in the comments section about what your dividend amounts were. We can celebrate, compare notes where we want to, or not. So here's ULTY. We'll start with the newest one first. So ULTY, in terms of price return, this one's obviously the easy one. We are at 1935 where we started. We are down to 1828. Obviously, we were positive at the ex-dividend date, so we paid out a dividend of a dollar and something. So it dropped more than the actual dividend. But that's the tricky thing with these funds is recovering, obviously, from the dividend payout. But if we look at total return, which we can now do because the dividend was just paid today, let's see if we actually have a measure for total return on here. So total return, it's got us down 2.46% instead of the, oh, I'm sorry. Let's see here. Total return over the last like couple of weeks, it says it's down 8.44% in this view in terms of total return. Now, if we go back over the same time horizon and look at just price return, why is it giving, you know what? It hasn't included the dividend yet, I think. That's what I that's what I'm thinking. But it did tell us for a second. It told us like 2 point something percent. At least I thought it did. Huh, very strange. Anyway, okay, so that one is not quite up to speed. We'll have to check back again later on that one. But as far as the other 21, let's go through those. Welcome, welcome. You guys are like the first ones on every video. Gotta love it. All right, let's go look at the other 21 now. Okay, so starting with Tesla, our worst one. In terms of price return, we're down 61.98% since inception. So we keep getting further and further down. Let me actually refresh this page here. Yeah, it's actually 62.8%. I think I'm just going to leave these tabs up because I'm notorious for leaving tabs up as it is. So I think I just leave them. Why not? Apple is down 16.2% in terms of price return. AMZY is 13.46%. The GUI fund is down 18.59%. NFLY is actually down 8.2%, which is strange because Netflix is way up. MSFO is 10.24% in the positive. JPMO is 5.83%. So this batch of 7, remember, since Seeking Alpha only allows us to view 7 at a time, got to do it across like actually 4 different tabs. So total return, ooh, Tesla is now down to 20.62% in terms of total return in the negative. Since we interviewed Jay, that has actually gone down another like 5%. Aptly is positive in terms of total return. AMZY is up almost 36%. GUI is only down 7.48%. NFLY, look at this turnaround in terms of total return, 21.04%. MSFO is almost 29%. JPMO is almost 17%. This one, like Jay mentioned, this is one of the less riskier ones. This one has a pretty steady trajectory upward, if you see that. So interesting stuff there. And then let's see our other ones over here. Let me, since I'm using StreamYard, let me switch screens again. That's right. Yeah, Monday's the dividend date. I guess I need to get my head checked. All right. Before I do that, let me continue the video. So DISO, let me refresh this tab. Okay, so this one's moving back up actually. So in terms of just price return, we're up 6.62%. XOMO is down almost 11%. AMDY is 4.56%. SQY is 18.41% in the positive. AIYY is down 26.34%. And then the YMAX is up 5%. The YMAG is up only 0.23. Now, if we select total return, total return is actually 23.55 for Disney. We're only down 1.57 for XOMO. AMDY, 39% almost. SQY, 48%. AIYY, we're down 13.47%. YMAX, we're up 10.65. And YMAG, we're up 5.4. So of the 15 we've reviewed so far, there are 4 of them that are down when it comes to total return. The others are up, which is the vast majority of them. Now let's go look at the last batch. The last batch is over here. Yield trash is Dissector coining a new name for YieldMax. Well, I would say they're not all trash. Um, Really, out of 20, well, 22 of them now, 4 of them have a negative total return. But like I say, if you take like say $1 million portfolio, for example, I think you're okay playing with maybe 10 or 20% in speculative dividend yielding assets, but certainly not your whole thing. And I honestly would refuse to believe that I could be wrong, but if other YouTubers have all their assets in YieldMax, I would be surprised. Um, I would definitely not recommend that for sure. The retired cop says, "Any idea why I can't purchase ULTY and Tasty Trade?" It says it's only accepting sell orders. Tasty Trade's not something I know a lot about, which for one thing, when I don't know a lot about something, that means it can't be any good. Just kidding. I make that joke because that seems to be uh, not so uncommon logic out there. Um, but that's a good question. Unfortunately, I can't answer it. I doubt that the advanced equipment could answer it either, because it usually, even though it's advanced, it just needs yes or no answers, which is really all it can spit out. Anyway, so let's look at the last batch over here. Let's see here. Okay. Oh yeah. Starting with this one, the greatest name in the history of funds, PP. In terms of price return, down 8.89%. Moderni or MRNY is about to go in the red in terms of price return. It's only 0.04%. Geez, like your checking account interest rate would be better than that. MSTY, 85.52%. OARK, down 35.46%. Oh, that means there's a fifth one. I stand corrected. There's now a fifth one. So these are getting beat up this week. NVDY is 40% in terms of price return. FBY is 11.51%. Coney is 31.29%. So one thing I want to make clear is that in terms of total return, um, the argument is pretty clear. You're going to be better off growth investing because, like has been pointed out on my Discord very articulately, you are getting all the risk with these funds with not all the upside. Your upside is capped. Your downside is unlimited, but your upside is capped. So you're much better off growth investing. That's why for me, for 80% of my portfolio, probably more, 80% of my total, I'm doing growth index funds, aggressive growth stocks, real estate, and stuff like that. I would never put everything into these funds. Now, if you're part of the FIRE movement and you want to, retire early, which is what that movement is, I could see maybe trying to get enough of a dividend income to live on so that that could replace your work income. Me personally, I like multiple streams of income. I would say I'm a true capitalist, not to the extent of some what you would call grifters, but I would say I'm a true capitalist. If I could replace my work income, that doesn't just mean I'd say, "Oh, let me retire tomorrow," because I'm still young. I still want to work. Unless I could absolutely replace that time I spend with a higher rate of return, which could come, day trading or whatnot. But I would say my one caveat to the FIRE movement, this is a little bit of a side rant here, but just because you can replace your work income doesn't necessarily mean you should quit working. My philosophy is make as much money as you can while you can, because you never know what tomorrow holds. So I don't necessarily subscribe to, hey, I make 50,000 in dividends, which is not what I make working. I make more working, but I would not say, hey, just go quit work unless you absolutely can't stand what you do, which if you can't stand what you do, then you pick the wrong career. For me, I woke up one morning and decided I was going to become an online financial guru, which I enjoy doing. It's quite fun. Capitalism or barbarism? It's probably somewhere in between, actually. Hold on. Is it capitalism or barbarism? Oh, duh. I can only ask it yes or no answers. It says it's decidedly so. So that means you're right, I guess. Let's see here. What did you think of 3x leverage funds like SOXL and SPXL? I'm a big fan. I'm absolutely a big fan, and we'll look at that too. You have to remember that income ETFs look worse in years when the market is up a lot. Let's see when these companies stop hyper growing and how the ETF performs, still giving dividends. I got to say, as a side note, you know what really hurts is when these new channels pop up and they literally cover the exact same topic that you cover and they get 5 times the views. I'm not sure what to make of that. I guess my content just sucks. But anyway, that's a two-way street, I guess. If you see a topic that does well, cover it, right? What does Dissector say here? I just don't see the upside because it limits upside. You know, Dissector, man, you're just an idiot. What can I say? Had to say it. Well, as you saw, Jay confirmed that you're not an idiot. So, and he said they were risky. They were a 4.5 out of 5. Um, yeah, the upside, which you have to understand, a lot of people hate what they do for a living. So the upside that they're getting, they see this as a pathway out of a life they hate. They see that, okay, they hate their job, they can make income on these funds, and they think that it accelerates the time horizon to get out of working and to do something they enjoy. One thing I can say, and I can speak from experience, um, as long as you reasonably like what you do, if you like quit work tomorrow, you're not going to maintain the same schedule unless you were like in the military and super organized or something. I can speak from experience. You're not going to get up at the same hour that you got up to go to work. You're going to sleep in. You're going to probably waste half of your day. So you're not going to replace that with as equally productive of time. So I guess moral of the story is that the fire movement has some caveats to it, shall we say? I like to try to use big words so I sound smart. Oh, and I just lost a lot of viewers on that. I was dishing out truth and I lose viewers. Amazing. Anyway, cash flow is king. I agree. You can allocate to growth, dollar cost average into safer positions or different income investments. And Richard King is laughing. As long as I make somebody laugh, I can lose half of the live viewers. As long as I make at least one or two people laugh, I consider it a satisfactory performance. By the way, none of this is financial advice. Of course, this is what I call edutainment. I hope it's somewhat educational and somewhat entertaining at the same time. Okay, back to the topic at hand. Okay, so where were we? Yeah, so Coney, so this is price return. So let's filter out for a performance, total return. Um, okay, PP is actually a positive 7.74% return. MRNY, 23.79%. MISTY, we got PP and we got MISTY, 83.37%. OARK is actually still in the positive, but it's about to get sucked under because of the performance of the underlying, I guess. NVDY is 106 into positive, 106%. FBY, 38%. Coney, 103.75%. So everything has taken a bit of a hit this week because the market had a big down day yesterday. Let me just refresh this so that we're in real time here. Okay, then. So in terms of total return, this batch of funds, all of these are in the black. So let's see. Of the other two screens, GUI is in the red. TSLA is in the red. Um, XOMO is in the red. AIYY is in the red. I feel like there's 5 of them now. Hold on. I think I just misspoke. How dare I? Oh no, it is 4 because OARK Let me double check here. Actually, no. You know what? I think it is 5 because if I look at ULTY, ULTY's actually down since inception. Well, we can't properly judge that because the dividend hasn't been paid out yet, as this commenter so astutely pointed out to me. And I was admiring your comment, by the way. I hope I didn't run you off, but that is true. They do pay Monday. They don't pay Friday. So what I said earlier in the video was a misspeak. Anyway, all right. I think I've ranted long enough here. Like, comment, and subscribe if you all haven't already, and we will see you all on the next one. Um, I still want to keep the portfolio reviews going. Someone submitted something. Actually, we can go look at that real quick in the Discord. No, I should end it. In the Discord, anyway, we have a lot of portfolios. Somebody submitted some really complex stuff that's I gotta take a second look at, but we'll be doing that soon. Also, the live show. I'm aiming for like Sunday, Monday, maybe a Wednesday, maybe a Friday. I'm gonna try to do it a lot. Anyway, thank you all for tuning in. Like, comment, and subscribe. Join Discord. We'll see you all soon. Take care. Bye.